Everyone knows Jumia raised a bit too much money in the past and spent it a bit too fast, but the past is the past.
Francis Dufay is the CEO of Jumia, the first African tech company to be listed on a New York Stock Exchange. He took over a company that had burned over $2 billion. The stock had fallen from an all-time high of $65 to $4.
If you look back today and you look at everything that has been done over the past 4 years, and you think, seriously, what were the odds that it would work? Yeah, that was not fully rational.
Today, Jumia operates in 8 African markets and is targeting profitability by the end of this year.
Between 26 and 27, we should get to something like that with decent scale and clear profitability. And based on that, then you can diversify, then you can expand, and you can build more services and adjacent verticals.
Hi, Francis. Thanks for taking the time and joining me today. Really appreciate it.
My pleasure. Thanks really for having me.
Amazing. I want to kind of jump right into it because you're obviously today the CEO of Jumia, the first African tech company that listed on a New York Stock Exchange. But you took over the company in a very precarious situation, a difficult situation where the company had incurred $2 billion or over $2 billion in losses. The stock had fallen from like an all-time high over $30 to $4. And you kind of committed to turning the company around and then reaching profitability, I think, by next year. Walk me through like the first period of taking over. What was going through your mind, and how did you come up with the plan kind of to turn the company around?
I think it was a mix of rational and emotional stuff. Like all important decisions, you can't be fully rational. I think on the rational side, the plan to turn the company around made sense because, well, it's the kind of stuff that I had been doing here in the Ivory Coast with my team over the past 8 years already. So we had a pretty logical, rational plan. It really made sense to build a business that was relevant for, well, Ivorian consumers and customers with relatively low income across Africa. And I was convinced that the basics applied in most of the countries where we operate. So the business plan made perfect sense, I believe. And then the emotional decision, the decision to like go for it is not purely rational, right? It's emotional. It's a big, for me, that was a massive step change and a bit of a leap, completely a leap of faith. And well, if you look back today and you look at everything that has been done over the past 4 years, and you think, seriously, what were the odds that it would work? Yeah, that was not fully rational, to put it nicely. But at the beginning of it, there was a business plan that makes sense, and that made sense for our consumers, our vendors, and something like a clear way forward. That's most importantly. If you think of the outcome like 5 years later, it's just very confusing because it's just too many things that can go wrong, and it's just impossible to plan. But the comforting thing, in a way, was to have a plan that would keep everyone busy for like a few years, so everyone knew what they had to do, and you did not really have the opportunity to think of all the possible scenarios. You had enough on your plate.
Absolutely. Before you kind of stepped into the CEO role on a group level, you were the MD of Ivory Coast. What kind of did you anticipate it would be like to be the CEO of like a public traded company, and what was the reality? Kind of what did you underestimate in the day-to-day of the responsibilities of being a CEO?
Oh yeah, I certainly underestimated large parts of it, really. But I think if you try to figure it out before taking the job, you never take it, right? So at some point you have to just go for it. I think that the new part for me was definitely everything that comes with investor management, stakeholder management outside of just running the business. I started my career at Jumia in 2014 in Abidjan here in the Ivory Coast, basically running the business, which is great. It's the best job in the company. I'm telling my country CEOs those days that you just have the best job. It's relatively simple. You just have to run a business well. You have stakeholders to manage in the country, of course, but you have a clear way forward. As the CEO, you certainly have 20 times more stakeholders to manage. You manage stakeholders in the country, you manage stakeholders all over the world, you manage investors, the board, compliance aspects for us that are extremely important as we're listed in the US. Yeah, it's just millions of topics to be aware of and to keep in mind at any given time, which makes it, in a way, fascinating, because you learn a lot, right? You discover so many things on top of just running a business, but there's also an exhausting aspect of it because you have to be on top of 100 very, very different topics all at the same time.
No, absolutely. How much, just out of curiosity, how much time of your kind of week is spent managing external stakeholders, investors, etc., versus actually kind of being operationally or strategically involved in the business?
Well, there's no typical week, so it's really hard. If I had to make an average, it's maybe 40%, 30-40%. which is needed. Some people see it, I mean, there are many different views on that. Some people see it as a waste of time because it's not directly helping the business, but that's part of the job. And if you don't do it, it will be missed, right? You will not get access to the right people, to the right investors. The image of your company will suffer. You'll have bigger risk on some aspects. So it's just something you need to fully embrace. And although it's not directly improving day-to-day operations or customer satisfaction, you have to play ball. If you don't do it, it's a risk for the company.
Absolutely. In this transitionary period, kind of from burning through all this money, being in hyper growth mode, partially, I assume, also because investors pushed for it and it was that time of growing at all costs.
That was the time. I mean, that's what the markets wanted at the time. So they got it.
No, absolutely. But then you kind of had to also make tougher decisions, maybe also like non-consensus decisions internally of shutting down entire business lines, entire countries. How do you go through this process of making the decisions, but then also implementing kind of the change management or communicating that to the internal team, if there's also maybe resistance in some scenarios?
I think in our case at Jumia, what was greatly helpful is that, I mean, we've been through, 4 very tough years of restructuring since late 22, like several waves of restructuring, the kind of stuff that can really break a company for good. But we made it through largely, I think, because we've been blessed with a very strong team, with a very strong sense of purpose, sense of mission, right? Our management team, which sit 90% is sitting in Africa. Our management team clearly understood the plan. Everyone clearly understood that we were giving to kind of give back power and autonomy to local management teams, that the plan we wanted to implement actually made sense for anyone who was on the ground. It made perfect sense. It was just a logical way of building a consumer business in our countries. Everybody got it fairly fast. And because we've promoted a whole new team of people coming from local operations, we got this amazing sense of purpose and mission in the company. So our managers, they know what they're building. They know why they're building it. We don't offer the best paying jobs or the most comfortable jobs in Africa. That's for sure. I tell my managers, if you want to get a better pay, you should have chosen banking or mining. That would have been a better choice. But on the other hand, I think the mission is very exciting. We're building something that's, we have the opportunity to do it. No one else will have the opportunity to do it later. We can change the way consumers are served across Africa. It's a very exciting mission. We're at the frontier of e-commerce, and we do it by building also amazing job opportunities and responsibilities to relatively young people in our middle management. And all that helped creating that, that very positive mindset that took us through very hard times.
I totally get it. Was that then also the major unlock, or also the biggest change on top of obviously the overall business focus because before the HQ was in Dubai, right? So you moved the management team back to Africa so that they're also, I guess, closer to the customer in a way, and then also promoting internally experienced operators?
Yeah, that's extremely, there were 2 parts to your question. The first part, we decided pretty much on day 1 that we're going to bring back top management to Africa. So we kind of repatriated from the HQ that was in Dubai at the time. We repatriated some of the best managers we could retain, and we had to let go a lot of people, unfortunately, on the other hand. And we've promoted a lot of people from the ground up, from local operations to top management, country leadership, functional roles, and so on. And that was greatly helpful. It fixed the problem in the company because, when you have HQ living somewhere where there's no business, and you try to build a business actually in African markets, in African consumer markets. These markets are so unique. If you're not on the ground, it's extremely hard to understand the reality. On the consumer side, on the vendor side, you need to live in this environment and you need to experience it. Otherwise, your decision making, no matter how smart you are, no matter how hardworking you are, your decision making will not be right. That's inevitable. And so in the company, we had this gap between headquarters and the rest of the company and the operational teams on the ground that we had to fix, and we fixed it the hard way. But it had to happen, and we were also looking to save money, so it all made kind of sense. And then we kept the positive trends, I would say, in terms of mindset, by making sure we promote from the ground and would give opportunities to people who were already in the business, which was both HR choice, and also we kind of had to do it because we're operating in a new industry. It's not like we can poach people from other e-commerce companies in Kenya or in Senegal or in the Ivory Coast. So we have to train our managers. We have to make sure that talent can grow and thrive at Jumia, and we have to give opportunities. up to the top. Today, most of our country managers, for example, are people who joined Jumia at entry-level jobs 5 to 10 years ago as junior account managers, even some interns and so on. And now some of these people made it to the top, so country CEO. And that's exactly the mindset we've been trying to promote. And I think that's the best way. It's not like we have a choice because, well, the industry, we're pretty much the only big company in the industry in Africa, but it also helped to foster a very, very positive mindset within the company.
It's super interesting that you're saying that because I interviewed Koen, the founder of Time Group, I think a month ago, and they also became the latest African unicorn. And he had the exact same story where now his like CFO and COO and country heads, they're like with the business since 9-10 years. And that also kind of automatically forms such a strong relationship between the team members and also trust, right? That you can move faster and operate more efficiently.
Yeah, and there's so much less. It's a bit less fancy and more pragmatic, but there's so much less risk when you promote someone from your team. You know exactly what you're getting, kind of, right? And you help to create opportunities for people below because, well, it leaves a position open that other people can fill, and it's a very positive domino effect across the whole organization. But also, in our case, because our operating environment is so unique. The culture of the company is quite unique. The pace is unique in our environment. Senior external hires are difficult, and the chances that it doesn't match are fairly high. Reducing risk through internal promotions is actually very helpful.
Yeah. On a more macro level, in terms of the business, in my research, I heard you say over and over again that the constraint in African e-commerce is on the supply side and not the demand. That's obviously always a kind of good position to be in as a business. Is that still the case today when you look at it?
Yes, absolutely. It was the case. It was even worse 3 or 4 years ago. We've greatly improved the supply side, but it's just the beginning. So taking a step back, if you look at macro around us in Africa, we're addressing fairly big markets. We were addressing more than 500 million consumers on paper. And when you travel a bit across our markets, there are two things that are quite striking. Obviously, purchasing power is limited, to put it nicely. Our core customers make something like $200, $300, maybe $400 per month, which is not a lot, especially after paying for food, utilities, school for the kids, transportation, and so on. And on the other hand, the markets are fairly poorly supplied, or very, very poorly supplied, actually. Supply is okay-ish in the biggest cities, but is extremely limited as soon as you go outside of the biggest cities. And we all know that about 3/4 of the population in our countries lives outside of the biggest cities. So you have the 75-80% of the consumer pool that is completely underserved. And there is demand. You have like 80% of the population that has some income, not very high, but some disposable income. And we're all human beings. Everyone wants a second smartphone, a bigger TV, or new shoes, or something fun. And when you live outside of the capital city, typically, no matter how much you're making, you don't have access to the right supply. Because supply chains from Asia to Africa and within African countries are still highly inefficient. So customers who already don't have a lot of money are also very poorly served on the supply side by the retail ecosystem, which is not fair and which is something that we as e-commerce can solve. The enablers are pretty much in place, so e-commerce can solve it. There's enough access to the internet, enough smartphones. The road network is good enough, just good enough in some countries and good in other countries, but we can solve that. So that's why our very clear angle over the past few years has been to make sure that all this latent demand, all those consumers who want to buy something, finally have access to the right value proposition, which mostly meant fixing the availability issue, so getting stuff available in the city where you live, and the affordability issue, so value for money, amazing value for money. If you make $200 a month, at the end of the month, after paying everything you have to pay for, you probably have 20 or 30 in your pocket. So it's important that if you want to buy a TV or even shoes, you get the best deal possible on the market. So that's what we've been solving for. And indeed, that's unusual for e-commerce. E-commerce in the West is heavily focused on stimulating demand, but we took the very clear angle of stimulating supply in our business model.
Yeah, totally get it. A huge part of that, I guess, value proposition is also having enough SKUs, so enough product and the right assortment. I saw when I looked at kind of the financial results of the last years, you kind of increased first party sales where you import directly and hold the inventory on your balance sheet, versus just like being a clear marketplace and taking kind of a take rate of the gross merchandising value. How do you decide which categories kind of to do yourself, go first-party sales versus third-party sales?
So we'd rather do 100% third party, fully marketplace. That's our DNA. That's how we operate the best, and we get slightly better profitability there. But as I was mentioning just before, there's enough demand. It's about getting the right supply and the right value for money. So we have to do what we have to do to get the right supply. And in some markets, in some specific categories, due to legacy or the way the market is structured, if you don't go 1P, so retail, you don't have access to the right supply, or you don't have access to the right quantities or the right prices. So depending on opportunities, we go 1P. For example, if you want to have access to the best supply of smartphones or TVs in Egypt or Morocco, it's better if you do 1P. Otherwise, you'll have to deal with smaller resellers and you don't get access to the right stock and the right prices. So we just adapt to the existing market structures. We try to gently push everyone to move to the marketplace where we're just better at running it. But we do 1P when we have to, in the interest of delivering the best value proposition to customers. Nowadays 1P is about 20% of our sales.
Yeah. But I assume marketplace is still the majority of that
that's
contributes to
80%.
contribution margin.
Yeah.
Okay.
Absolutely.
Now, got it. Is that also kind of, because you've seen like Temu and Shein in different markets enter the market, is that also kind of a answer to that because they're kind of underbidding on price? Although I know you're still way better on the logistics side and delivery and also faster.
So it's not specifically an answer to Temu. It's just the clear line of sight for us is to offer amazing value for money to our customers, whatever it takes. So we'd rather do marketplace, but if we have to do 1P to get there, we'll do it, period. And delivering amazing value for money helps us beat Temu and the likes as a consequence. But, for example, the arrival of Temu in countries like Nigeria has not materially changed our strategy, which was just getting the supply, getting the price, getting lower prices and delivering to customers wherever they live. That still applies.
The approval rate, if you look at the approval rates from Temu, they're also not that high, especially because they have no kind of on-the-ground logistics and their delivery times are quite long, right?
Yeah, that's another angle here. Definitely for international competitors coming to our markets, to African countries, adapting is a big deal. Very often they just can't adapt, because it's not in their playbook, it's not in their DNA, while we have fully adapted our business model to what Nigerian consumers actually want or can afford. So foreign players, because of how unique our markets are facing a very long list and small and big issues that we have already dealt with and that are now embedded in our value proposition and that have become like barriers to entry in our case.
Yeah. A lot of founders are listening to this podcast that also operate businesses, startups, want to build startups, but also investors in, Europe or the US. And I think all kind of see, especially foreign investors, they see Africa still as too risky. And one major contributor to that is the currency risk. Although the currencies have stabilized over the last year, how do you manage that? Because you operate across, I think, 8 countries right now, right? How do you manage currency risk across all those jurisdictions?
So first of all, I'll make a statement. It's important to me. It's not as risky as it used to be, and or as it looks from the outside. Right? The perceived risk level of African markets is highly exaggerated at this stage. Currency, we're now in a new cycle with much more stable currencies. It's been tough between 21 and 23, 24, especially in countries like Nigeria or Egypt, but we've just enjoyed now 2 full years of great stability, and we seem to be on the right track for a whole new macro cycle, first of all. And political risk, that's already usually very high on the minds of investors, is extremely limited in our markets. We operate in 8 of the biggest and obviously most stable markets in Africa. Of course, every now and then, countries run elections and that's part of the normal democratic process. But we have not experienced significant political risk across our footprint in the past many years, actually. And most importantly, even when times are tough and there's a bit of political even uncertainty or insecurity, like we operate in Nigeria, there's a bit of insecurity in some northern regions of Nigeria. But we're in the consumer business. And what I'd like to remind our potential investors about is that consumers remain consumers even in tough times. And we operate in Nigeria, we operate in northern regions as well. We have thousands and thousands of customers, of course. And whatever happens like 500 kilometers away from them doesn't impact like I would say, shopping behaviors. People still want a fridge for their home. People still want new shoes or a new t-shirt or whatever. Human beings remain human beings. And consumer demand is not really impacted by what I would call like background noise. I mean, a very unfortunate noise sometimes, but it does not impact the fundamentals of supply and demand or the market opportunity. I mean, in countries like Nigeria, for example, to take the most obvious example. So I think that the risk is exaggerated, and foreign investors still have a relatively hard time understanding that it's actually a relatively stable business environment if you're able to filter out what is just noise and focus on just business fundamentals. And that's actually a new cycle that's going to be a lot more favorable than the last one.
I guess the only thing that would kind of impact consumer spending directly is a sustained economic downturn where GDP growth slows down. But if you look at the jurisdiction, especially that you operate in, but also overall in Africa, you see sometimes even double digits GDP growth, right? So
yeah, I mean, we're more on a bounce back. I mean, the last cycle was bad for all emerging markets and partially frontier markets. But in the last cycle, it was closed about 2 years back. And now economies are bouncing back. The stock markets are up in all markets. Local currencies are slowly appreciating again. It's a much more favorable macro environment that we have.
yeah, and the US dollar is also kind of devalued against the currency.
If you believe in a sustainably softer US dollar, it's good for emerging markets and it's great for Africa.
Yeah, I want to kind of
especially in the
touch
consumer
on
business.
Yeah, I mean, definitely. I want to touch on more of the fundraising and capital side, because most African tech companies are private by nature because they're younger, they haven't been around that long, and maybe they also don't meet the criteria of listing in New York. You kind of been able to access money in the public markets and capital in the public markets repeatedly. Did being publicly listed, especially during that transitionary period that was obviously very tough, hurt you more or help you more?
I think to come back on the past, obviously, I mean, everyone knows Jumia raised a bit too much money in the past and spent it a bit too fast, but the past is the past. When it comes to being listed, well, first of all, we are listed, so there's no going back at this stage. And the way I like to present it is that being listed, especially when you operate in emerging markets, comes with the massive burden, right? I mean, it's a lot of people we have to hire on compliance teams. It's a lot of additional expenses on compliance and audit fees and so on. So it comes with pretty clear constraints being listed and operating in emerging markets, and especially frontier markets. But that's the price to pay for access to funding and capital that, I mean, in proportions that are otherwise impossible to get in our markets. So it's a trade-off. It's a balance. It comes with a cost. I mean, being listed and all the constraints that go with it. But you get, on the other hand, amazing access to financing if you need it. So that's a trade-off. I can't just complain about the constraints and forget about the bright side. So that's where we are. We're listed. We're not. I mean, there's no going back at this stage. We use that for financing in 2024, and we're happy to get the financing, right? So I will not be ungrateful on that aspect.
Definitely. And I assume also, if you had burned through all that money and you would have been appointed CEO and you were still private, you couldn't have accessed that capital in private markets that easily, right?
It's a whole different battle. It's a lot more challenging, obviously. So, but yeah, I mean, of course, in our markets, I mean, to state the obvious, across African markets, we're fighting with the informal sector. And these guys are obviously not playing by the same rules. It's obviously not a level playing field. But on the other hand, we have access to capital in such ways that we can't beat them on other aspects. We can build better technology. We have better sourcing, better supply. We can build a whole team to source for Jumia in China. So it comes with very clear advantages as well.
Yeah. For anybody that doesn't know, what is the difference between accessing or raising capital in the private markets from VC or maybe also development finance institutions and in the public markets? What's like the main difference in terms of process, investors, and just how it all works?
I think the first and main difference is the scale. I mean, there's just so much more money in public markets. I mean, in proportions that I could not even quantify, but you have access to massive pools of funding going to the public markets. And you can do it with a lot more flexibility than if you're private and you have to convince investors one by one to sign a deal with you. It comes with a lot more compliance, a lot more fine prints and so on. But really, the size and the flexibility make a big difference here.
Okay, got it. Speaking of investors, Xi'an Telecom invested in Jumia last year. I think I bought an 8 or 9% stake in the business. What's the kind of strategic logic, or what does that partnership unlock for Jumia as a business?
So I think Xi'an has been a fairly active investor in the tech ecosystem of Africa. So investing in Jumia was part of this broader push into supporting the tech ecosystem in our markets. They've been very helpful, sharing with us their experience of African markets. We understand each other really well because we have the same customers in the end. We have overlaps in Senegal. Then they're very strong in Eastern Africa, but in countries where we don't operate. And we're very happy. So it's great for us in two ways. One, we're very happy to benefit from their experience, the learning from them on business opportunities across our African markets. And second, it's a very strong message of confidence. Like having Axian on the cap table means a lot in the African tech ecosystem and gives us credibility.
Is there anything specifically, if there's maybe, I don't know, knowledge transfer between the two companies that you learned from them that kind of changed how you operate the business?
So we're definitely working on some topics. For example, they have a strong consumer finance arm and we're looking into opportunities together, but I cannot comment very specifically on business topics at this stage.
Okay, got it. Also on the kind of African private market side, there are a couple companies or a lot of companies now that are being talked up as potential IPO candidates. There's Flutterwave, there's OPay who actually filed now in New York to go public. There's MoneyPoint, obviously there's also Time Group. You kind of lived this experience of being a public market CEO and being under the compliance and scrutiny kind of the public markets. If they kind of called you for advice, what would you tell them about whether to list or not?
Well, I think listing is the right thing to do at the right point in time, right? I think you're mentioning companies that are at the right stage. I mean, they've built a very strong ecosystem. They've built scale, profitability. It makes sense. It does make sense. You should definitely not list if your core business is not strong enough because you're going to just add constraints on top of it, and it's just not right. But as soon as the moment you've built a very strong core business that could benefit from additional liquidity to scale, it makes perfect sense. But your business needs to be strong enough so you can add, a bit more constraints, some additional costs to, the cost of being listed, as I would say. So you need the right business to support it. But if you've built that kind of business and you have opportunities to expand and to leverage additional funding, then you should do it, absolutely. And it's good for the African ecosystem. It gives some visibility to our whole ecosystem, and it will hopefully inspire other companies and more investors.
Yeah. And if you, like in a scenario where Jumia was still private, you would also list in New York again just because there's so much liquidity, right? Because there's also this counter argument, and you also have seen like some examples of companies listing locally on the GSE or in Egypt or in Morocco.
Yeah, I think that to us there would be no question. There's just so much liquidity in New York. It just trumps any other argument. That's case closed.
Okay, so simple one. If you look into the future, because obviously now there's like this turnaround phase, and now you kind of can reaccelerate. And I know also you're aiming for profitability next year. If you look kind of a bit further into the future, maybe like the next 5 or 10 years, what does winning for you personally look when building Jumia going forward?
I mean, for me personally, not for the company, you mean?
Maybe we can also touch on both. For you personally, but then also the company.
So for me personally, as I was saying, all managers at Jumia are kind of on a mission. And my personal mission is to make sure that we build the basis. I mean, not at this stage, we're building the basis and fundamentals, but we build a large, profitable, sustainable, healthy e-commerce platform for Africa that can really have positive impact on a whole ecosystem of vendors, of logistics partners, of marketing partners, Salesforce agents, and so on. I mean, Jumia is as I like to put it, Jumia is a small company in a big ecosystem as part of the marketplace and the logistics network, especially. So I'm still in it for quite some time. But what I want to leave as a legacy here is really this strong, scaled, profitable, healthy platform that can grow a whole ecosystem and have positive impact in our countries. And that's what I would like to leave behind personally as a professional achievement. And when it comes to Jumia, I mean, it's really hard to tell you what it should be in 20 years or 10 years. I'm moving a bit fast right now around us, but I want to reach very fast the end of the first phase, which is building a large, profitable marketplace platform across the continent. And that's step one. And we're getting close to that. I would not call it large yet, but very soon profitable. And between 26 and 27, we should get to something like that with decent scale and clear profitability. And based on that, I mean, if you look at other examples across the world, across emerging markets, well, that's on that kind of strong platform then you can diversify, then you can expand, and you can build more services and adjacent verticals. And Jumia should not stay only an e-commerce marketplace and in only 8 countries. We'll have opportunities in more countries across Africa where the fundamentals of supply and demand are very similar. We'll have the opportunity to expand to more adjacent verticals and businesses, obviously in logistics services, obviously in consumer financing, advertising, and so on. So we will have plenty of opportunities. I mean, just following the long list of examples from other e-commerce players in emerging markets. So we just need to make sure that we pick the right opportunities and we execute with discipline. I believe on our continent, we're never short of opportunities, but we're often short of focus and execution. So we should remind ourselves, just like we've done over the past few years, to do it in a focused and disciplined way.
Yeah. I mean, you used to kind of get called the Amazon of Africa. Now maybe you could be compared more to like a Mercado Libre in LATAM. And they followed a similar path, right? They kind of built this profitable e-commerce business. And then on top of that, now they heavily went into kind of consumer finance and extending credit to their customers.
Yeah, I think the simplified catchphrase for Jumia is the Mercado Libre 20 years ago for Africa or Shopee for Africa. That kind of example resonates perfectly and it makes sense, but we're doing it in a way that's heavily customized and adapted to the realities of our continent. So there are, for example, if you take Mercado Libre, the biggest market is Brazil. GDP per capita in Brazil is about $11,000. My biggest market now is Nigeria, and GDP per capita is about 1,400. So about like less than 15% of what we just discussed for Brazil. So it's obviously very, very different markets, and you have to adapt the business model accordingly. If we were serving much richer customers, we would do it differently. But yeah, I am happy to take the comparison with Shopee, Mercado Libre, or even Amazon. It's flattering, and it helps legitimize the brand. But we're actually doing something that's quite unique and heavily customized to the African markets.
Absolutely. In terms of development outside of your business, but maybe also in e-commerce or logistics that you're seeing right now happening in your markets, what excites you the most?
Outside of e-commerce, I mean, obviously AI. That's not very original right now, but no, I mean, more seriously, the latest developments of AI, and just the last 6 months actually, it's already starting to change the way we work in pretty much every aspect of the business. Some fundamentals will never change, like you need to deliver to where your customers actually live, and it's not AI that's going to deliver magically. But a lot of our work is changing because AI can do part of it or help us doing a lot more efficiently or a lot better. And it's infusing across the whole organization. It's impacting most of the company. And that's a very interesting development. I mean, that's just the intellectual challenge is fascinating, and the need for adaptation is huge. I mean, being very practical and very pragmatic in our case, as I was mentioning, we're serving people with limited disposable income, so we need to be extremely lean, extremely cheap in everything we do. I mean it in a good way. We have to be very efficient. Customers cannot afford to pay for waste in our organization, and so AI is a great opportunity to become a lot more efficient and scale without adding costs. And so fantastic opportunity in our business specifically. And so we're trying to leverage it as much as we can.
Okay. On the spectrum kind of founders and CEOs, I think have kind of voiced different opinions in Europe and then the US of kind of AI augmenting people or replacing people. Where do you fit on that spectrum?
50-50. The truth is that jobs will be replaced by AI. I mean, some jobs, right? I mean, a lot of jobs will be replaced by AI. That's the truth. I don't, from my experience, but also a lot of work will be done better, faster, will create more value for customers, for vendors, for all stakeholders. That will not necessarily destroy other jobs, but that will make things, that will just enable us to deliver better service to consumers to start with. So it's definitely a mix of both. What's more challenging, what we see is that it's more in the medium level jobs that it's more challenging because some jobs can be replaced. We will always need someone at the warehouse to move products around. We're not going to buy robots in our ecosystem, and we'll always need competent, experienced managers to use AI well and to make the right decisions. But the more junior positions, as we see it right now, it's going to be more challenging because you're more in the window where AI can actually take a lot of the workload.
Yeah, totally get it. How do you see, because that also has been kind of a topic, this like SaaS apocalypse, they call it in like the investor circles, where investors, because of AI, think the kind of cash flows of companies are less reliable and less predictable, and that's why they kind of apply like a higher discount factor in their models of valuations. And that's also what you're seeing in the stock market right now, that like SaaS companies are being valued with way lower multiples. How do you see that development?
Given in Jumia's history, I'm just in no position to give advice on valuation. But I think from what we see looking at software, I think it's obvious there will be disruption. And it's really hard to tell who will be the winners and the losers at this stage. So at least I understand the uncertainty in that industry. In our case, we see that with good AI, we're able to already start replacing some softwares or replacing part of the scope that some softwares used to cover. We're able to renegotiate much better prices from some vendors on software. So that's going to change the industry for sure, but I guess we'll still need some very good software. But bad software will be in danger for sure.
Yeah. No, I think I agree. But I think it's good for you, right? You can replace software costs. You can maybe bring down fixed
for us,
costs
it's great.
through reducing
For
labor.
us, it's fantastic. I mean, it's not just about replacing people. That's too basic and that's too black. That's too much black or white. Yeah, we're able to replace some software. We're able to reduce the kind of work that we expect from some other software by giving the rest to AI. So it's helping us across the whole cost base.
Yeah. No, that's I think a good note to conclude on. I think it's been a joy for me at least to record it. I learned a lot. We touched on interesting topics. If people want to reach out to you or also will learn more about Jumia, where can they find you?
To reach very good question. We have not prepared those channels. We don't. I mean, I try to do a bit of PR, but I try to manage also the balance, right? So I try to make sure that I still dedicate enough time for operations and not just to PR and interviews. But yeah, we have our PR team with Benzi. We're trying to give as much visibility as we can on our business. I mean, the bright side of being listed is that every 3 months you get news from Jumia and you have access to quite a wealth of data if you're interested. And we're really trying to explain the business as much as we can. We know that for foreign media and foreign investors, African markets are still perceived as risky and poorly understood. Our business takes some pedagogy as well to be well understood. So trying to put as much information as we can and available to broader audiences.
Perfect. Then we'll end on that note. Thanks, Francis, for taking the time. Truly appreciate it. And yeah, I mean, the goal is to be profitable next year. So maybe we speak again then when you're
at
profitable.
the very end of this year, fourth quarter.
Okay. Yeah, great.
That will be a huge achievement. I mean, right now we're very proud of serving customers in our markets and being the only e-commerce company doing it like very seriously at scale across Africa. I think it's an amazing mission, but we'll be even prouder when we prove to the world that it's a real business and it actually makes money. And that will also be good for our whole ecosystem, not just for us. It will hopefully give a bit help to legitimize the whole tech industry across the continent in the eyes of foreign investors.
Absolutely. Okay.
Louis, thank you very much.
Yeah, thank you.